welcome back to a new video. Today we're going to take a look at the NASDAQ 100 from a order flow, technical, as well as a fundamental perspective. Now we're not going to look at the sentiment data because the sentiment data for the NASDAQ 100 is not available to the public. We're also going to look at speak about what we can expect from the NFP tomorrow. So if you are new to the channel, a sub would be appreciated. It does provide valuable educational content on a daily basis. If you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, starting with the monthly time frame, what do we see? Firstly, we can see how the market had printed a strong level of support. Support got broken, and the market is about to test that level as resistance once again. The market also printed this information. After the information, you expect to pull back to the neckline before the continuation. The market also printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low. Now we can see how the market had tested and rejected the 38.2, which could mean the start of the pullback all the way to this level over here. Now, so about that, dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can firstly see how the market had broken below the strong level of support. Now, once support gets broken, it becomes resistance. We can see how the market tested and rejected that level, giving us a further confirmation that we can potentially see the NASDAQ start to melt to the downside. Now, if you drop down on the daily time frame, what do we see? Now, from a daily perspective, I think it's a lot clearer over here. Now, here on the daily time frame, this is the most recent structure that the market had created. Now, this level over here acted as support, then the resistance, but we can also see how this level over here acted as resistance and then support. Now, the market had also been stuck within this consolidation phase, so we basically just need a clear break of this consolidation phase before we can start looking for the opportunity to sell the market. Now, there is two ways that we can approach the situation. Firstly, the target that I identified from a monthly perspective is sitting at this level over here. Now, most of you might go, now, do you really think it's going to go that low? Well, if it could go that high, it could go that low as well. Now, we could potentially see the NASDAQ 100 start the meltdown from where the market is right now. And that would probably be a risky entry to take from where the market is now. But trading is all about risk. The best way that you can approach the situation is wait for a clear break below that level. Then on the retest, look for the selling opportunities. Because in doing so, would the market then print this information to the neckline, which is considered a bearish pattern from a technical perspective as well. Now, that is the two ways that we are going to approach the NASDAQ from a technical perspective. Now, the next thing we are going to look at is the COT data, which is the commitment of traders. Now, firstly, we can see a base of last week's report. The hedge funds came in and they added plus 7,000 long positions, and they added also added plus 2,755 short positions. We can see how the overall net positions for the long is sitting at 75,000, and the overall short positions is sitting at 61,000. So we can see that the hedge funds actually wants to go long, but unfortunately, that's not always the case that the market would give us or what the market would give them. Now, if there's one thing that we need to take into consideration is that Powell had came out and testified in front of Congress yesterday, and he did hint a potential interest rate hike coming for March. Now, if you ever wondered what the interest rate got to do with the stock market, well, high interest rates are meant to reduce economic demand, potentially cutting into earning and hurting the stock market. And we know that the higher the interest rate, the less future money is worth today, and vice versa. Therefore, when rates go up, the stock market goes down. Now, this doesn't just apply for the NASDAQ, this does apply for the S&P 500 as well as the Dow Jones. Now, if you look at this article over here from Powell, and we're not going to go through all of the data, we can see over here that Powell came out to testify and said that he is inclined to support a 25 basis point or a quarter basis point rate increase in March policy meeting, but said the central bank is prepared to move more aggressively later if inflation does not abate. So we know at the moment inflation is sitting at 7.5%, which is the highest that it's been since February in 1984. So if inflation, so we're getting that CPI data coming out on the 13th of February. If that the inflation numbers are higher, we can definitely expect the bank to hike those interest rates even more aggressively as expected. Now, before we go over here so we can definitely expect this move to continue to the downside, because why? When interest rate goes up, which is which Powell has confirmed yesterday is going to happen. So we can definitely see the NASDAQ 100 go down to at least 12,200, the 12,200 mark over there as well. Now, just to get an indication in terms of what we can expect from the NFP tomorrow, it was confirmed that he also said that the US is also more economically insulated from the crisis from Europe through. Okay, that's not the point that I wanted to read. Okay, he said here, nonetheless, the US economy is growing strongly, has very low employment, and is experiencing inflation 40-year high. So, one key point that we do know is that he had mentioned that the unemployment rate or the unemployment is quite low at the moment, still not better than what it was pre-pandemic level. So he has hinted that the labor market is doing quite strong. We also saw that the ADP, which is something that I always don't advise people to follow, but the ADP also came through yesterday as a positive, which could further lead to giving us an indication. We can definitely expect the NFP to be positive tomorrow as well. So this is the way that we are going to approach the situation for the NASDAQ 100. And as always, let's be reactive and not predictive. And let's go and have a positive outlook on the NASDAQ, on the NFP tomorrow as well. Now, thank you so much for your time. And as always, cheers for years.